Alrighty, hello everybody. Hope everybody had a nice weekend. Good weather coming. All right, so thank you again for emailing. Keep it coming. I do see them. And like I said, if you want priority access to the new venture that is now coming soon, please email me at tradingwithjasmine@gmail.com. So thank you for the kind words, a lot of you, and some of you that I've met before. Very nice to see some nice comments for sure. All right, so let us get started. Support is with us again. So any questions he can answer too as well. Okay, so for today, you can see that, so right now we're just talking a little bit and then we'll move on to the charts. The markets rallying overnight as we had hopes of reopening. More countries and states are starting to lay out some plans. India, Australia, Italy saying May 4th. They're being warned somewhat, but anyway, getting some parts of the economies running. Construction, manufacturing, that type. And of course, everybody's saying they're taking precaution, but they want to get things moving. Even New York City saying that may be a possibility for May 15th. Could be starting in upstate New York, though, but at least there are started to talk. So that's a good thing for overall. So coming into this week, though, with the economic data that we're going to have, we're going to see. So we already know that it's going to be a dismal data in general. So the only thing we're looking for with it is how bad it's going to be, how it's going to really affect us going forward the next few months. And if this is going to get kicked off, starting to reopen, how slow, the little things like that. We already know the major part of it where, a lot of things get hurt. Yeah, I take a look at some of the brick and mortar stores who were having trouble already. And now this is just going to cause that extra. It's hard to survive. However, for a lot of them, I do believe that they, have, online, which so they cut out a lot of, expenses, but they can still sell online. So not completely bad. You take a look at a lot of them, BB, Victoria's Secret, now Neiman Marcus and all. But, online is still a very big avenue in general. So, but what's bad is it does kill a lot of jobs. So, but anyway, so that's one thing. And we will also be looking at, there's still continued another heavy week of earnings. Apple's going to come in on the 30th, but European markets also having a lot with Deutsche Bank actually have turned. Initially they were saying not too good, but now they are saying decent. So that's a positive going in for the banks. And Tesla is going to be reporting too. I mean, car makers in general are having some difficulties, as we know. So that, and central banks, and that's going to be in focus this week. Starting, actually, the Bank of Japan already started. So they have announced unlimited quantitative easing. And that's even before the monetary policy that's coming out tonight. So there is a tentative monetary policy coming out, but they have already given that to us ahead of time. So, but the yen is rising, so go figure that. So let's get into the charts. All right, so you can see that we have the S&P So very nice rally off of our weekly demand zone. As you can see, well, actually daily, weekly, about the same area. But it is getting stuck. You can, right at this point where prices have, pretty much, this is where prices have stalled for a bit, broken out from. So you can see this is where we are stalling now. We did take one little fall back from some supply. Now we've rallied back up into it, and we're still stuck in this overall area. So we didn't clear this overall area quite yet. But definitely you can see a very strong. I find it funny that we're still talking about a lot of them still saying, well, is it V, L, U, W? I mean, it looks pretty strong to me. I don't know about anybody else, but I don't know. I don't know if this is still a guess or not. But of course, this is a very important point in general for the overall stock markets. Yeah. And, so what's going to be more in focus this week is going to be both the U.S. and the Eurozone, the GDP, along with the ISM manufacturing survey. They are showing that they're going to be sizable contractions as it is. Like I said, the main thing will be, how bad and how can we really recover from it. I don't know if you can really tell that from just a week, but it's already expected to be bad, but just how bad it really is after all of this lockdown. And if we can really get started like most of the countries want us to get started. So that's a whole other factor as well. All right, let's go into our 60 area of supply and demand. So this was an overnight area that prices have rallied out from. We still have the above zone. That looks next important zone is going to be the 3002 to the 3034 up to the 3081. You got these 260-minute levels on top of each other. All right, so what we see is that I kind of consider this was an old 5-minute area that we've had that prices never got back to, but it came pretty close to it. Since it isn't overnight, I'm going to consider it more as, with the overnight zones, it was significant because it started with this whole move down and never got back to it. So it is significant, but in terms of whether it would, if a new demand form, I would probably still trust that demand a little bit more, unless unless we still stay under here and the Nasdaq gets into some supply. That could be a different story. But for right now, this area came pretty close to it. So you can see we have so far an overnight high of 28.65, and that area was basically 28.66 to 28.70 to me. So I do consider it kind of like a one hit already with it. On the lower end, so you can see anything close by, all we have is overnight levels too as well. So you can see here, these two areas on top of each other as well is 28, this area is 28.33 to 28.29 and 28.22, 28.27, 28.22. Below the overnight low, you do have these two zones on top of each other. It's a pretty big range in the overnight. You can see we started the day a little bit on the weak side, but after Asia, things really started to pick up. During Asia, things started to pick up some, and then really started to rally until London started to come in. Then we started to see a little bit of a contraction there. But you can see right below the overnight low, we have these two 5-minute zones of demand at 28.04 to 28.05. 2808 and 2797 to 2801. And for the SPY, those areas are, so for the SPY, the upper zone, that is coming in at 314 to 308.82. So like I said, with these ETFs, either you are trading them straight up or you are using them to time your stocks. And you can see on the 5-minute, you're going to have this 280.70 to 281.10, and then 280 to the 280.30. Okay, so that's on the SPY. Okay, and then of course we still have our lower demands on the 30-minute, which is coming in much lower, which is below the gap. You have a 30-minute down below at 260.27, 257.94. Not that these areas, you can see it's still a gap down below. It's just that it's been tested a couple of times. So if we do find some weakness and come back down, this won't be the first or second time back into this gap. And then you have this fill of a gap below that. So to me, the fresher area looks at the lower point here if it does start to drop back down. All right, let's move on into the Nasdaq. Let's start with so Nasdaq is important if you're trading any of the technology stocks or the FANG stocks. Nasdaq is going to be important to you, the NQ and the QQQ. So again, so you can see the Nasdaq really taking off, and it's usually the market you could see a lot of buying coming in right off of this overall weekly area. Got pretty quickly. You can see we did have some trouble here, but since that time, not a whole lot to stop things, and we have continued to push up pretty strongly. Well, in general, if you take a look at technology, once China started coming back, you started getting a good amount of people starting to come back into it, and then as well as anything that's on the internet you're using too while you're at home. So there's a lot of things that's a plus for it. With that being said, though, you can see we are nearing a little bit closer to our 4-hour zone, so you can see there's not a whole lot in here. That's why we didn't really have much supply zones once we got past this area. And the reason why this zone down below, we formed some new demand on the way up. So anytime you hit any sort of higher time frame area, whether it's supply or demand, then you got to start to look for if it's reversing, and then if it starts to form new zones on top of it. And that's what happened here. This after it started to break out from these tops, it hit into the next supply, but then formed also a new demand. Now you can see we did have one initial drop down before the level. Now we're starting to come back up, and that's closer to the 90.68 to the 92.31. Okay. Now let's go into, I think I had a 15. This one's 10. Let me go into 15. What was I looking at with the 15? I think it might have been an area a little bit higher. Go back a little bit more. Just want to see it right above these highs. Okay. All right, let's go back. It could have been on the demand. All right, let me go to the other chart. All right, so you can see we've rallied all the way back. So again, just like the S&P, we had these two 10-minute levels on top of each other. That was way back when, before all of this drop. It never pulled back into it. We did pull back into it overnight now. You can see we came up and we hit the area, still holding very close demand nearby, and you can see we're still pushing up from the very, very close demand. So you can see there is some supply there, but because new demand has formed, like I said, as we come off of higher time frame, and equity markets in general like to move higher. That's what their nature is. Their nature is to, everybody wants to get long, everybody wants to buy stocks, everybody wants to invest. So the nature of if everything is good, of course you can't, you can see if you wait till all the stars line up, though, it'll be too late. So you take a little dabble in when it hits the higher time frame area. Then as it starts getting more people in, you either move up stops or you add on, things like that as prices start to go. And you can see we're still holding up very strong. Down below, we do have a 10-minute overnight demand that's coming in at 87, 86.75 to 87.68.34. Okay, 89. Okay, so a little bit higher. This area, what I was looking at, I think that might come in line with I think we're good with the 4-hour. Because you do have these two 10-minute on top of each other, but I believe that should be within the 4-hour, I believe. Maybe not. This could be below it. Let me just check. Oh yeah, it is below it. So the difference between the two, the 4-hour you can see is going to be above all these highs, right? So a nice little pop up and into supply to try to take it back down. This lower area on the 10-minute is actually still from the last move down. So not a great imbalance of supply to demand there. But I pointed it out because the time of day is not bad and the levels are not bad. So that's why I'm pointing it out. That's 882 to up to the second level, which is 89.21. Like I said, you want to always watch these. So if you could time these the best with your entries into your stocks too, that's going to help you out a lot as well. So up above on the Qs, get more days in. Okay, so on the Qs, that area is the 220.97 to the 224.80. And then your 5-minute area is below. It is coming in at the 211.50 to 211.10 and the 211 to the 210.50. How many of you actually trade either the Qs or the SPY or the S&P, the ES and the NQ, or do you like to use them as a guidance for your stocks? Just out of curiosity, if you want to put in there. Because like I said, in the beginning, all I knew was stocks because that's all, CNBC likes to focus on stocks. So I really didn't even know anything about what Qs or SPY was. And, that really didn't matter to me a whole lot. I was just looking for the most volatile stock that I could find, and that's usually the ones on the little ticker tapes. Yeah. So you like to trade futures, but your ETF is actually acts as a guidance. Okay. So some of you are guidance. So some of you may be doing even options, and you'll be using that too as a guidance too, correct? Yeah. So definitely a big mixture here. That's good. Good to see. Yeah, and some of you will just trade. Yeah, and for if you go and speak to a lot of the people, most people are not going to really even know what futures or currencies are, right? Because you're just not exposed to it. So you think it's something totally different, but what we see here is that the ES and the SPY, right? They move. They're the same as they move, and then the NQ and the Qs. So you can trade them directly, or if you want. But what people don't realize too is, you need a certain amount if you want to trade stocks, and you get that leverage if you're moving to the futures market, and that's what makes it attractive for a lot of people, is that they can trade these markets. Of course, people that do options is different as well, but just in general, if you just want to trade it straight off, you have that option because the leverage is much better inside the futures market in terms of tying up less capital to trade the same vehicle. So, all right. Yeah, okay, excellent. Yeah, definitely a good mixture here. All right, so for the Russell, now remember the Russell is the small cap. So sometimes what happens with the small caps is they take a little bit of time to get rolling. So they can be the weakest, or they could be the strongest. So far, we've seen the Russell always being the weaker one so far. But they can be one that once it starts to pick up steam, I mean, Nasdaq we always see can be a big leader, but the Russell can, if we start to really see some buying come in. And for today, I do believe, before we go into the Russell, let's take a look here. So we've been talking a bit about the VIX, and we've seen that the volatility dropped quite a bit since the market has continued to rally. So you can see that we've, let me just see here. So you can see that we've come into daily, some daily supply, right? This was a new daily supply that's formed. And we've continued to drop. Now it's kind of hitting this first little area of demand. So could we see a little bit of movement with the Nasdaq supply and the VIX demand? That's possible. But what we do also see is right above, we are also starting to form some new supply too as well. So that's something to also be aware of. So that's kind of telling us too, not that this is a perfect inverse, but it can also give you some kind of guidance as well. So at the position we're in, it's hard to say you want to take new longs in equity markets this high. I mean, it's hard to say with just given our situation that we're in. But hopefully you got in at good points and you don't have to worry about it, right? Okay, now let's go back. Yeah, most of the strength is just coming from, you got a lot of things going, which is just the talks of, this is our plan. This is our plan to open up next month. This is what we want to do in a week. So of course, what can throw things off? Well, all of a sudden you open up and all of a sudden the infection rates go up, skyrockets or something. But also some people believe, well, it's getting warmer, that could help things too as well. So maybe the fall things will start to, you got to look out again. So there's a lot of different things going on at the moment. But for right now, seeing that people are okay to go back to work, that seems to be the biggest thing at the current moment. That's what's helping things overnight. We have a few things actually overnight. We had that. We had also if you take a look at the UK, Boris Johnson, he also came back into office. So that's kind of showing, okay, well, we have somebody coming back in to stabilize things for us again. And also he fought it off, and he's supposedly well again. So that's also a good sign to show as well. And of course, the central banks, just in general, which is just showing you that they are willing to do whatever it takes. That's another thing. So there's a few things that just adding to the stock market fuel. So let's take a look at the Russell. We'll start with. For the Russell, yeah, we have the IWM. But you can see right now we've hit up into the first area. We've been falling off of our second area, still a little bit higher at 12.99 to 13.31. This area down below, so that's if we get a fallback. It is an overnight zone, but it still looks not too bad. You can see it's a little bit a European session here. That's 1203.50 to 1197. So if you're looking at, you could go to the IWM. So this is the same area that we had on RTY in the .D session, which is the day session. Now we have this same area inside the IWM. So that higher zone is going to be the one coming in line with that 4-hour RTY. So that's coming in at 127.10 to 129.60. And then I believe we have some 15-minute down below. That's coming in at 121.20. That goes down to 120.57. Okay, and then for the Dow, so the Dow is still also still holding below. So even though we've had a pretty decent rally overnight, I mean, the Nasdaq's still the strongest one. These couple of markets still didn't get past their previous supply zones quite yet. So you can see here with the Dow that it has hit one time into this 24.16 to 24.60, and now still below it at the current moment. Your fresh demand is coming in at 21.952 to 21.645, but we also do have a 10-minute overnight demand. That's coming in at 23.722 to 23.685. You can see all of them right now. as it falls back, it's still holding some 5-minute overnight demand. So still relatively strong. Can always come in and see as we come into the new session, like I said, with the VIX where it is and where the Nasdaq could possibly go to. You can see if there's any sort of stall within that area, then prices can start to flip around again. But for right now, the overnight is definitely showing pretty good strength. Okay, let's move into crude, which is still showing us not really. So the problem with crude is we have, it's still the issue where there's just too much supply, and the supply is going to cause the storage cost is going to be high too, if there is anywhere to store it. So this becomes an issue. So there's still a problem in overall crude. So couldn't even get back up to our 240 supply zone. Have started to fall back and now has some new, you can see some new supply zones. Let's go take a look, which is going to be overnight zones as well. So you can see it's formed a couple of overnight zones. And you can see the first one's at 1650 to 1677, 1540 to 1571. And you can also see 60-minute is also starting to form a little area too. Oh, it's actually better on the 30. Yeah. You can see it also starting to form a little area too. So we're continuing to just form some new overnight supply as prices start to move down. We don't have any real significant demand. We just have a couple of little 5-minute overnight levels. This one, I do believe it kind of touched slightly before because it's the whole larger area. There's a few levels on top of each other. So I do believe it touched the upper portion of it. This one hasn't been touched, but it's a part of this big general 60-minute area. So these two, like I said, are just overnight, and then there's not a whole lot of to stop prices again once it gets below that. So yeah, they need to figure out. Well, once people start moving again, that'll be the big thing, right? Then things start to move fast. But for right now, the problem is, where you're going to store everything. How much is it going to cost to store everything? How much is it going to cost to ship everything? So it's that becomes a problem. And like I said last week, with although the president did say, we're not going to let our companies fail, going to support them in every way to keep their employees, so that part is good, but still we need to figure things out with that. All right, so that's on oil. Let's move to gold. Gold really hasn't gone anywhere ever since it has hit our 60-minute supply, 60-minute demand. The next fresh supply is really higher up on the weekly. So there's nothing really great underneath here unless we start to form new ones. But for right now, it's not, with the dollar weakness, this hasn't picked up that much. But it's just holding up in general because metals does well in this type of environment. You have people starting to use it again, and then you have just in general for the metals, it does well, even though we have a dollar that's continuing to drop. So like I said, nothing much till higher on the weekly for the fresh supply. Inside of this range, well, you can see, right? So there is an overnight level underneath current price, but we are right smack in the middle. So, if you ever notice where you probably have the most difficulties is when you are in the middle, because the direction is sometimes just very hard to get. But the only reason why I put that level out there is because it is below the overnight low and below yesterday's low, and it is is it no, it's not overnight. I don't think it is overnight. No, it's not overnight. Okay, so that's why. So it's not overnight. It's a day session, and it is below yesterday's low and the overnight low. That area is coming in at 1718 to 1721.50. Right. But I just wanted to give you a picture of it all, where it is in the middle of this whole overall area. Okay. Now let's move to UNG. Let me just take a look at that. All right, so UNG it could be a little bit lower now. You can see where it rallied back up to. So it came off of our demand, rallied up almost close to filling the gap. Now you can see we're starting to fall back again. Does have this supply at 1339, 1364. Nat gas, what did I do in that gas? Let me see. Oh, yeah, okay. Nat gas. So nat gas, so we had a couple of demands. The first, here, let me go over here first. So now we're all the way back there. This was the initial area, so it was in, was it? No, it wasn't an overnight. So it was the only thing with this one, it was tested a few times. So you can see this time it did go pretty deeply into it. Typically, you don't like it if it's gone, that deeply into it already. So this time in is not, less buyers are left. And the only reason I would say would be if a new demand kind of forms in here. Otherwise, I would leave this overall area alone. You have the lower one that hasn't hit yet, which is 1627 to 1598. And now you also, let's take a look here. So a couple of things you can see right up above. This one, I'd imagine, so let's go check out this area here. Whoops. Get some dark lines here. All right, so let's check out this area here, which has been hit once, but let's see, 1884 to 19. I just want to see where that is. Oh, that's wrong market. Come back. Don't mind the description. I don't know what's going on lately. Their descriptions have been really off, so no clue why, but don't pay attention to those. Wait, now I forgot my numbers. 1884, 1901. All right, let's see. That's where the daily was. I'm going to remove that. Looks way different. Wait. Oh, is it going to be the gap? Looks like it's going to be the gap. That's what it looks like it's going to be. Yep. All right, so you can see this area right here. Right? So it does look like it came back once. What was the high here? Just kind of missed it, but this is the gap, and this is the area of the gap. So it does look like it slightly hit it once on the overnights. You have your overnight high 1901. You have yesterday, well, the previous week's high 19. Okay. Yeah, so that's what it looks like to me right now. This is going to be the gap. Does look like it's just slightly touched it once, and then yeah, that's going to be the area. Where is it in relation to that daily? Yeah, so it's still struggling up at this daily area, and then we started to come down. All right. Yeah. I mean, still looks decent in the overnight. Like I say, it just came pretty close to it one time. All right, let's take a look. So with the dollar, let's go into the dollar. Dollar. All right, so the dollar, like with anything else, I mean, this is what you really call range here. This is don't get much more rangy than this, right? So, hit up into supply, hit up into demand, well, hit up in demand, then supply, then demand, then supply, then we're really right in the middle here. So, I don't, it's not too surprising. We do have FOMC on Wednesday, and we have ECB on Thursday. However, this month is different than last month. Last month everybody was just throwing stuff out before their meetings. It was just boom, boom. Everybody was like, oh, cut this, cut that. Days before. Now more than likely, we're not going to have that anymore. They've given significant stimulus. But the main thing will be on the press conferences where they're going to see if there's any changes to the current credit measures. So that looks like that's going to be the main thing that's going to be on focus as their words about the credit measures. And more than likely, they're all going to say they're committed to, especially the Fed is going to be committed to supplying the market with whatever is necessary. EU, though, they are having a little bit more difficulties because their summit really didn't. There wasn't any progress with it, basically. There's nothing with the summit. And so it's going to have to shift back to Lagarde that whether she's going to elaborate on her, she said, quote unquote, too little, too late theory. So they're going to see if she's going to have more to say about that and what she means by that. And so so far her press conferences have been a little bit lackluster. It really hasn't have the same impact as Draghi used to have. But with her, that's what they're going to be looking for. So a lot of the words are going to be more in play than the actual rate statement this time. Right, and so for the European markets, it is going to be about the Bund. and the bobble, and I believe the spread with the BTP, and so those are all going to be the importance coming into later on this week. And don't forget Brexit. Brexit is still coming back as coronavirus starts to subside. Brexit is starting to come back into focus too as well. Not so much this month, but more than likely going into June. But the problem with that is they're on very different sides of the, you know, not even close to being somewhere where they want to negotiate, I guess is the word. So, so with this scenario, I believe the euro is going to be still difficult, just because we are in the middle of the range here, right? You can see we are going to be very difficult, and yeah. Yeah, well, when prices go up in the bonds, you just got to figure that means lower interest rates, right? So when we see these charts, right? So you got to take a look in that term. When we see these charts going to the upside, that's telling us lower interest rates. Yeah. But let's go take a look at the. So I would be extremely careful with the euro in general. We had, just because of that given scenario, it is continuing still to bounce off of the weekly area. I'll come back to that. You can see we just missed the little 5-minute area. Then we came up and we're a little bit sloppy around it because we just missed it the first time into the 5-minute area. So now really I don't think there's anything too great. So I would just stick with the higher time frames. Where is it? 60. All right, so a little bit higher time frames, so that's getting above all of this mess. If prices start to come down, then they should form some new supply too as well, but very messy inside of this whole area. And all we have now is back down to the lows on the 30-minute. We do have some more demand, but we'll go through that before, definitely I'd say before Wednesday. It could be tomorrow, I would imagine. We'll go through the lower demands too as well, because you do have to go back. I have them on the charts. It's just you have to go back quite a few years. So I'm not going to do that today because I don't think it's going to be that much going on. Watch the minute I say that this thing starts to fly. But yeah, so just so you know, there are some demands below current price. This one you can see was tested once. We barely came back to it. So it can be an area that you can watch out for, but not the freshest area. Let me just see one more. You do have this 15-minute area demand, which you can see is 107788 to 10705. Yeah. But like I said, with all of this, we are in the middle of that range. And those areas for the spot market, just so you have some numbers. Spot market, oh, I know why I brought up that. I do see this on the 4-hour, which looks like it formed here on the 4-hour. So that's something I would keep in mind, because the spot market for some reason looks a little bit different than the futures market. It looks like it came down and hit this demand, then now formed this demand at the 108.46 to 107.842. So it can be something that you look out for. In terms of real strength, you can see I think it needs to really get above this whole area to show a little bit more strength. You can see this whole area here where it's holding a little bit like a wall at the moment. So even though it's not a fresh area, but I would like to see if the euro's really gonna try to pop to take this out. All right, let's move on to. So for the pound, for those of you, I don't know if any of you took anybody in the pound. I mean, you don't have the dollar that's cooperating with you. So the Aussie, the pounds, they are going to benefit from just this type of environment where the equities are higher, right? They're going to Aussie for sure, and then the pound too. But we are holding below a couple of our supply zones right now. BP. Right. And so these are a couple of our supply zones. On the close end, what we do have is, you can see we have a close 5-minute overnight. So if you're looking for quick little moves out, and then you can see that we have opposing areas right above the 124 and the 123.70. And then down below, you have a retested zone coming in at 123.63 to 123.52. Then our higher areas. The reason why I don't put too much, it is that whole 30-minute area is coming off of this 240. The upper zones look fresher to me. You do have some overnight that you could watch out for too as well. So you could definitely watch out for that coming up a little bit higher. But right now, that's still a little bit further away. The only reason why you want these on your charts, because when we do have a week with possible FOMC, ECB type of thing, you always want to be prepared and just have it on your charts. For the spot market, those areas look like this. Right, spot market. Then put in the lower zone. Okay. And the opposing areas, again, numbers are pretty similar to the futures market. It's not always like that, but it looks like to me they're pretty similar to the futures market right now. And the 30-minute, the retested area is 123.60, 123.48. We also have, okay, let's go through the Aussie. Okay, so Aussie, you can see same thing, went up pretty high up into the area, but that's because you have a 4-hour zone still higher up. I think that was the same 60-minute that's been there for a while and that we came off of. Now you can see, yeah, this area here that we've came off of. So now we're trying to break through that previous 60-minute area that it fell from. Now we're coming back up, and you can see the higher area is the 65.48 to 65.89. And we have some 5-minute demand at two levels on top of each other here. That's coming in at 64.06 to 64.17. So any of these lower time frame, you do want to be careful once you get into, the news events, because the news events is usually the time when the smaller time frame, if there is something major that it has trouble on holding. Those numbers in the spot market are 65.49, 66.28 on the supply. And the, oh, I don't have it here. Maybe because it's a spot market. Spot market, I don't always like to do smaller time frame because, but that's the general area. That's 64.16, 64.05. And then one more. So CD, the one thing I did see was, okay, so we're still falling from our 15-minute zone, as you can see. We had a few 15-minute zones on top of each other. We're still falling from this lower zone, but we did rally off nicely after hitting some targets. Now I'm watching out for this area here, if we can. So we're bouncing off of this demand on the 240. Now I'm kind of watching if we can break through up on top. Looks like we should have some new demand at the 70.77 to 70.52. And that opposite picture on the dollar CAD. Oh, I don't have it here. Where do I have it? Maybe it's on the, let me see what I have on, oh, this 30 and the 60, okay. I put it on, maybe not. Okay, here we go. So on the 30, you can see that area is 141.36 to 141.60. Yeah. All right. Okay, so we do have a pretty good week coming ahead of us. Trading should be still pretty, volatile if we get some more news. But for today, it looks like a little bit of complacency going on. Just be aware of where the VIX is at. So thank you again for the emails. Keep them coming. And if you liked it, subscribe, hit the subscribe button or hit the like button. And email me about the new venture that's coming up. And I will see you again, I believe, tomorrow. So I'll see you all tomorrow.